Okay, so this is problem 6, and again we are going to prepare the balance sheet for this particular bank, Kuber Bank Limited, and you have been given debit and credit balances of the bank. Okay, this is like a trial balance, but only with the balance sheet items, not profit and loss items. All right. So based on these items, we will decide as to which categories, which different schedules we are going to put all of them. Okay, let's start. So under debit balances, the first thing you have is cash in hand. Can you tell me which schedule?
6.
Okay, cash in hand, schedule 6. I'd like the others also to attempt this, please. Then next is balances with RBI. This will be again,
6.
yes, this will be again schedule 6. Then you have balances with other banks. You can start like memorizing this format this way. Cash in hand and with RBI 6, anything that is given to other banks is 7, right? So balances with other banks is 7. Money at call and short notice, this is also 7. Okay. The simpler ones, the very obvious ones are very easy to identify. Only the ones that are given a little differently, you have to think and put them under the respective schedules. Okay, where will government securities come?
Miss 8.
Yes, government securities is an investment. It will come under 8. What about shares? Shares will be, now, is these shares a debit balance or credit balance? The shares are a debit balance, isn't it? It's not like share capital given on the credit side. So these are not your own shares. They are not your own company's shares. These are shares of some other companies which your bank has invested in. That means this is also schedule 8. This is an investment, right? So shares of some other companies, shares of some other banks, it can be that this bank, this Kuber Bank Limited, for which we are doing the accounts, they have invested in those shares. If the shares is on the credit side, that means it's share capital, but the debit side means it is an investment. Gold, what about gold?
Schedule 8.
Schedule 8, very good, investments. Then bills purchased and discounted, where will they come? Now this is slightly little different, little interesting. Whenever we had interest on the bills and discount on the bills or interest on advances, we always put it as an income, like we have it, isn't it? Now in this case, whenever we take the bills from any party, or okay, now when I say we, I am pretending that we are a bank. So whenever a bank takes the bills for discounting and gives some discount, discounted amount to the person, you are actually giving a loan, a type of a loan or a type of advance. If you're getting confused by what I'm saying, let me just show you like in a more illustration type of form. So we know the whole concept of bills discounted, right? We've done it several times. So when a person, like say the seller, it's usually the seller, the drawee who has the bill with him, and he is the one who wants that money as fast as possible. So when the seller approaches the bank and gives the bills, okay, for discounting, what does the bank do? The bank gives the seller some amount, isn't it? Like if the bill was of 10k, 10,000 rupees, and the bank will deduct some discount of 500 rupees, which will become its own income, its own interest, and remaining 9,500 it will give to the seller. Now always remember that this 9,500 is like a loan. Okay, it's like an advance given by the bank to this seller. because the seller should have waited till the maturity of his bill in order to get that money, isn't it? He is the one who accepted the bill, so he should have waited for the maturity. But since he wants the money urgently, the bank is giving it to him as if it's like a loan, right? Later the bank will recover that money, no doubt about it. Like later when the maturity date comes, okay, like after 2 or 3 months, the bank will recover that money from the buyer. Fine. So the buyer who was supposed to pay the seller will instead pay the bank. That's okay. That's another part of it. But when these bills are accepted by the bank and they are discounted, that is considered as a loan, as an advance which have been given to this seller, right? So bills purchased and discounted will be shown under schedule 9 as if they are in advance, as if they are a loan. Done? Next, cash credits and overdrafts. Where do we show them? What is cash credits and overdrafts? They debit balances, so they have to come under asset side. Where will they come? Yes, the type of loans, isn't it? All types of cash credits are short-term loans, overdrafts are loans on current accounts. So again, this is 9, advances, fine. Then premises, schedule number. The more you say it, the more you practice it, like the more it fits in your head that okay, they go in this particular schedule. Yes, schedule 10, very good. Furniture and fixtures.
Schedule 10.
Schedule 10, good. Now there is something called inter-office adjustments, a simple concept. There are branches of all banks, isn't it? Like there is head office and then there are so many branches of all these banks. So there are some adjustments, there are some transactions that happen between them, some balances, or it could be any transactions, okay? If this inter-office adjustment amount is given on the debit side, like it is given in this problem, you will put it under other assets, that is schedule 11, always remember. And if that same inter-office adjustments shows on the credit side, okay, as an entry on the credit side, then it will come under other liabilities. So if it is debit, it is other assets. If it is credit, it is other liabilities. Correct? It's just something that these branches, these bank branches are supposed to pay each other. So if the other branches are supposed to pay you, then it becomes an asset for you. It will have a debit balance. If you are supposed to pay the other branches, then it will be a credit balance and become a liability. So other liabilities. Is that clear? Right? So this goes under other assets. What about stationery and stamps? Where should we put stationery and stamps under this balance sheet? It will come under assets only because it is a debit balance, it will come under assets. So where should be? Is it a fixed asset? Stationery and stamps, is it a fixed asset? No, it's not a big long-term asset. It will come under other assets. 11. Stationery and stamps is like small things, small type of stationery. You know, you have those checkbooks, pay and slip books, so much of paperwork that goes into banks, all that the bank is maintaining. They have stock of it. So it's like stock, it's like other assets. Then non-banking assets. Now this is a very new interesting term called non-banking assets. Now what are these? See, a lot of times when a bank gives a loan, it takes something as a collateral security, okay, or a collateral as we call it, simple terms. So you have let's say given a loan and you have taken any building, land, property, factory or something or the other as a collateral, you know, that mortgage. So any assets which have been acquired by the bank, okay, in satisfaction of claims. So let's say somebody did not pay a loan and you acquired that property. They had taken a house loan, they had taken a loan on that house by mortgaging it, but these people failed to pay the loan after even warning and NPAs and this and that, did not pay the loan. So what did the bank do? It acquired that property, it acquired that house, right? Later on the bank auctions it and that is a whole procedure. But for now that house now belongs to the bank, right? Correct? So these type of assets which are not actually the bank's assets but they are some defaulting client's assets, okay, who was not able to pay his loan, such assets are known as non-banking assets. You can just make a note as I am explaining that these are assets acquired in satisfaction of claims, which means they were taken as collateral security for advances or loans. Alright, so these are non-banking assets and they come under the category of other assets. Done. Next is interest accrued. Now this is interest which is receivable but not yet received. And we know that anything which is receivable is an asset and this will come under other asset. So interest which is pending, not yet paid by maybe RBI or other banks or wherever, but interest which is yet to be received by the bank. Fine. And finally tax paid in advance, also other assets. We know any expenses prepaid, any expenses paid in advance, they go to the asset side. So other assets. Okay.